So, I want to talk to you today about how to get the best interest rate possible when you're looking to buy or refinance a home. For most people, they think that means calling three or four or five different places and asking them what the rates are before they've even applied for the mortgage. That's kind of a waste of time. Anything you get from a lender outside of what's on your actual loan estimate is really irrelevant because that's the document that we have to issue in order to give you a good faith estimate. In fact, it used to be called the good faith estimate of what your interest rate and fees are going to be. There can be some value in that. We can give you a rough idea, a neighborhood, but in order to give you an actual quote on what your interest rate is going to be, I have to find out lots of information about you. There are 6 pieces of information we have to have from you before we'll ever issue a loan estimate in the first place. Your name, social security number, and your income, the property address you're wanting to finance, the loan amount you want to borrow against it, and an estimated value of that property. Either way, if you actually want to shop interest rates, the loan estimate is the way to do it, no other document. People will give you lots of different things and call it an estimate and even make it look fancy like it's something that you can see as a guarantee, and that's not the case. So you might even get something from your lender when you're looking for a quote that looks like this, something called an itemized fee worksheet or a fee estimate or a lot of different names for the exact same thing. But ultimately, you can see what I highlighted here, and it says that your actual rate, payment, and costs could be higher. Get an official loan estimate before choosing a loan. So a lot of times, people will try to use this as a stand-in for a loan estimate to try to show you that they're quoting you something. This looks a lot more serious than something that you would just say over the phone. But again, they are not responsible for holding themselves to this quote. Now, this is an actual loan estimate, as in that's the name of the document. You can see it in bold in the upper left-hand corner. You'll have the lender information at the top, all of your loan terms, and your interest rate. But probably the most important part of comparing these documents is the upper right-hand corner. Number 1, the loan term, the type of loan you're getting, and whether or not the interest rate is fixed. And even more importantly, whether or not the interest rate that they're quoting is locked or not. Now, when you first are applying for the loan and they have all the information, you can instruct your lender that the rate that they've told you over the phone is what you want to lock. Then they would have to mark this upper right-hand corner as yes. And it will show you the date in which the quote for all of the fees expires. And if the rate locked, also when the rate expires, along with a rate lock agreement that'll be behind this form. And my point with saying all of that is, if you're still ultimately going to be left in that same spot where you are waiting and waiting and waiting to find out what your interest rate really will be, then trying to put that much effort in it up front is actually not that productive. I think that a more productive way to use your time would be trying to shop the loan officer themselves. So if you're just starting out, how do you shop for a loan officer? A few pretty simple things that you can do to make that decision a lot easier. Number 1, you can go to nmlsconsumeraccess.org. NMLS Consumer Access. So this website is specifically meant for you, the consumer, to be able to search for any loan officer or mortgage company and see their licensing information, when they got into the business, what companies they have worked for in the past, what their experience is. If anybody has filed any complaints against them, it will be in here. So this is one of your best tools to figure out who you are dealing with. May seem very obvious, but Google them. And not just to go to their website or their company's website or whatever, but to see what kind of results you get. Number 1, you're going to probably see reviews pretty quick, pretty near the top. Google really prioritizes those. So you're going to see what other people are saying about the business. But also you're going to see what type of attention this person is paying to their business. Do they have, are they listed on the Google Maps page? Do they have their own website, not just their company's website? Do they have any type of blogging website that they're putting content out on? That may seem like a small difference, but the fact of the matter is anybody can start a Facebook page. So just because you have your Facebook page with a business name on it, that doesn't really mean that you're in business. Taking that extra step, if you are a business owner, of making sure you have a website to show that your business is real and where it's located, or at the very least to be listed on Google Maps, because Google Maps is different. They make you verify your address and your phone number in order to be listed in the search results. Feel free to disagree or even call me a weirdo for this one, but I like to check out people's personal Facebook pages too. I feel like anybody can keep it buttoned up on their business page or just not post anything at all, and it doesn't really give you a good idea of who they are. But if they have really strong opinions on something that you may not agree with, that's where it will come out, and I like taking a look at that just to see. So particularly in the early phases, when you are trying to get a pre-approval, you really are better off shopping for the loan officer rather than the rate. And then once you actually start finding a property that you like, if you feel like they are not giving you the best deal, or even just to get a second opinion or third opinion, or however many it takes for you to be comfortable, that's when it's a good idea to start shopping around for the rate. Because now you're deep enough in the process to have all of the information. Now, that is going to mean that you have to make a full application with each lender that you want to check with. That means each lender is going to pull your credit. And that can be a bad situation, depending on what your credit is like. But also, I would say, don't automatically listen to people that say, don't get your credit pulled, blah, 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 because for the most part, if you're getting it pulled by multiple companies within the same 30-day window for the same industry, then it's not really that big of a deal with your credit. The whole inquiries thing with your credit is actually meant to stop you from opening multiple types of credit within the same 30-day window. So if you were to go apply for a home, a boat, a credit card, a signature loan, all within a short window, the credit bureaus are going to say, whoa, this person is trying to get way over their head really fast. We got to shut it down.